Welcome back friends to the class number 66. In the previous two videos we have discussed the full concept of cash flow statement, and now in this video we will discuss the 6 critical and important drawbacks of cash flow statement that you all must be aware of. Now what are these? So these the limitations and drawbacks of cash flow statements. The first one is sometimes the cash flow statement ignores the critical type of non-cash transactions. Although the cash flow statement is designed to calculate only the cash flows, so we can all say that non-cash transactions should not be part of the cash flow statement. But there are some kind of transactions which are very critical in the business, and if we only judge the cash flow statement, if we only study the cash flow statement, then there are chances that we will certainly miss out this critical information. The two examples are conversion of your debt into equity. If you pay off your debt by converting them into equity share capital of your company, so there is no cash outflow involved, but your debt is getting repaid and your equity share capital is getting increased, right? So this critical business transaction will not be reported in cash flow statement due to its non-cash nature. Second one is the payment of employees compensation by way of stock options. When you pay your employees salary, some companies give them stock instead of the cash payment in their salary. So we call it employee stock option schemes. So some companies give it as a bonus as well. So when you pay off the salary expenses of your employees by way of issuing them or giving them rights of stock options, and they exercise their rights in certain years, so these all are kind of a non-cash transactions. So these all expenses of salaries that are non-cash in nature will not at all be reflected in the cash flow statement. The second limitation of cash flow statement is there are chances of intentional manipulations. The organization, the company can intentionally manipulate the cash flow statement or the books of account in such a way that the cash flow statement represent a very good or a very rosy picture of their business. For example, they can postpone the payments of their expenses, resulting in higher cash inflows in the business. They can speed up the receipts on exceptional basis, so that in order to show the higher receipt of cash flows in their business at in a particular period of time, right? Third limitation is information is historical in nature, and it cannot by itself provide actionable insights for the future planning. The cash flow statement is presented based on the past data, based on what has happened in the previous year. So you cannot use the cash flow statement to assess the future of the company. You cannot do any future planning just on the basis of the cash flow statement. So this cash flow statement is good to understand the past, but it is not as good to understand the future of the company. Now, the fourth and the most interesting disadvantage of cash flow statement is that it doesn't tell the timing of cash flows to us. When the financial year if for example, if the financial year of the company start on 1st April 25 and ends on 31st March 26, the cash flow statement is prepared for this full period. For this full period, we get the cash flow from operating activities, investing, financing activities. But it may happen that in the first 9 months, the company may not be doing any business, or the company's cash flow were too much poor in first 9 months, and the cash flows actually occurred in last 2 or 3 months of the year only. But if we study the cash flow statement, we will not come to know that these cash flows have occurred in last 2 or 3 months only, right? Because we will get the picture as a whole for the full year itself. So the cash flow statement doesn't tell the timing of the cash flows to us. Now, another disadvantage is the cash flow statement is not the true profitability of the business, that you are already aware of. Cash flow statement just tells us the inflows and outflows of the cash in the business. But if we want to know how much profitable the business is, then the cash flow statement is not a reliable statement type. Then we have to resort to other analysis of financial statements in order to calculate what the exact profitability of the business is. Then the last disadvantage or limitation of cash flow statement is its subjective classification. We know the cash flow statement is divided into three parts: the operating activities, the investing activities, the financing activities, right? So there is no standard, there is no set of rules to classify them into operating, investing, and financing. There can be biasness, management's biasness involved into what item to be treated as operating, what to be treated as financing. They can have a different set of thought process, and they can classify their items accordingly, right? So since there is no standard set of rules, there is no particular standard that is followed in the industry in a particular country or across the globe, so the cash flow statement for comparison purpose with other entities may not be such useful, right? So these are the 6 disadvantages that I wanted to discuss with you in cash flow statement. I hope you have enjoyed the video. I will meet in the next video with the next topic. Thank you very much.